Welcome to the week that was, your shortcut to understanding the currents moving the world of digital assets. And the past few days have been a real roller coaster, haven't they? Especially for Bitcoin.
Oh, absolutely.
Headlines screaming about market turbulence. But today, we want to, dive a bit deeper, get beneath that surface noise.
Exactly. Because while the market's immediate volatility is, well, it's undeniable, a closer look really reveals these powerful long-term structural shifts happening. This isn't just about fluctuating prices anymore. It feels like a pivotal phase of maturation, sort of transitioning from, speculative retail moves to something more institutionally backed, a long-term asset class in the making.
Right.
So we'll be covering the significant movements and the emerging trends reported right up through yesterday, August 29th.
Okay, let's get into it. Let's unpack this roller coaster ride of price action from the past week. So early this week, based on the Tuesday report, Bitcoin took a pretty sharp dive, right?
It did. It plummeted from over $117,000 down to near $108,700. That was a 7-week low.
Wow. And that wiped out, over $200 billion from the total crypto market cap? That sounds like a really severe stress test.
It definitely was. And what we saw there, it was really a classic leverage flush-out event.
Right.
Essentially just too many optimistic long positions, bets that prices would keep going up. They were forced to close when the price dropped.
So liquidation cascades.
Precisely. Often at a loss. It signals what we call weak hands capitulating.
Yeah.
The data showed over 20,000 Bitcoins sold at a loss just between Sunday and Monday.
And that critical $110,000 support level just broke.
Decisively broken, yeah.
Yeah.
Which makes that $107,714 bull market support band a really crucial line to watch now for any kind of recovery.
Okay, so after that initial shock, what happened next? The Wednesday report described the market entering tense consolidation.
Yeah, that's a good way to put it. Bitcoin seemed to stabilize, but it was choppy, kind of hovering around that $110,000 to $112,200 level.
Right. We did see a tiny gain on Tuesday, like 0.40%, ending that losing streak. But still felt like sellers were, pretty much in control.
They were. Even with that small rebound, the short-term bearish technical signals were clear by the time we got yesterday's report, August 29th.
How so?
Well, Bitcoin was visibly struggling below key resistance levels like $113,300, and it was testing its 100-day exponential moving average.
Which is a key long-term trend indicator.
Exactly. Plus, those momentum oscillators, the RSI, which tracks price movement speed, and the MCD, both stayed below neutral, signaling that, the bearish pressure hadn't really gone away. Defending that $109,000 support level is just paramount right now.
Because a breach could trigger something worse.
Easily trigger a deeper correction, yeah.
And looking at the very latest data from today's report covering Friday's action, Bitcoin has kept sliding.
It has. Fell below $108,000 to hit a multi-week low around $107,400. And this was made worse by a huge liquidation event on Friday.
Another one.
Yep. $540 million in over-leveraged long positions liquidated in just 24 hours.
Oh.
Ouch.
Wow. Okay, beyond the price charts, what about the overall mood, the sentiment? I saw the crypto fear and greed index mentioned in Tuesday's report actually rebounded from fear back to neutral, hit 47. Does that mean the panic's over?
Well, that rebound right after the flush out is pretty significant, actually.
Right.
It suggests the initial, raw panic did subside once the excess leverage was cleared out. But what's really fascinating is what the report showed midweek, this kind of investor-trader standoff.
Standoff. How so?
Well, you had long-term investors quietly accumulating. We saw 192 Bitcoin net outflow from exchanges reported Thursday, the first net outflow in 10 days.
Okay, so buyers stepping in.
Right. But at the same time, some of the big players, the whales, were actually taking profits. Addresses holding over 1,000 Bitcoin, they declined to a 1-year low.
Interesting. So a real divergence in strategy there.
A clear divergence, yeah. Different players, different time horizons.
So this short-term choppiness, does it mask maybe a healthier underlying network? Or are the fundamentals also showing some stress?
That's a great question. And on the network health front, actually, we've seen some pretty encouraging on-chain metrics this week.
Like what?
For example, Bitcoin transaction fees. They fell to their lowest levels since 2011, according to Monday's report. That makes the network way more cost-effective for, actual use.
That's a big deal.
It is. And network activity itself remained robust. Friday's report showed confirmed daily transactions holding strong, somewhere between 510,000 and 575,000.
So people are still using the network despite the price swings.
Definitely. And looking at today's data, the short-term holder MVRV indicator, that's the one comparing market value to realized value, basically showing if recent buyers are underwater.
Right.
It's dipped into its oversold zone. Historically, that's often been a sign that speculative holders have been flushed out, and it can precede rallies.
So potentially a contrarian bullish signal brewing underneath.
Potentially, yes. It's a key signal for possible reversals, something to watch.
Okay, I absolutely have to ask about this whale story from earlier in the week. Tuesday's report mentioned a wallet, inactive since 2019, suddenly selling 24,000 Bitcoin. That's like $2.7 billion. What was going on there?
Yeah, that one definitely caught everyone's attention. And it was far more than just, selling off. It looked like a really sophisticated capital rotation, a massive conviction play.
Rotation into what?
Ethereum. The entity immediately used those Bitcoin proceeds to acquire over 400,000 ETH. But they didn't just buy it spot.
Oh.
They opened leveraged long positions and also initiated staking with that ETH.
So betting on Ethereum's outperformance and yield potential.
Exactly. It wasn't just ETH will go up more than BTC. It was a strategic bet on Ethereum as an increasingly productive asset, leveraging its yield generation through staking something Bitcoin, in its base layer form doesn't directly offer.
Was that just a one-off crazy whale move, or is it part of a bigger trend?
It was definitely part of a broader and frankly quite eye-opening trend we tracked all week, a clear divergence in institutional fund flows.
Okay.
So spot Bitcoin ETFs, they saw significant net outflows. Over $1.17 billion in just the 5 days ending August 25th.
Oof.
Meanwhile, Ethereum ETFs were soaring, attracted an estimated $2.5 billion in August alone.
Wow, quite the contrast.
And yesterday's report, August 29th, really hammered this home. Spot Ethereum ETFs logged an impressive $455 million in daily net inflows on August 26th. That actually surpassed Bitcoin ETFs for the second time last week.
So ETH ETFs are pulling in serious money.
Huge money. Total Ether ETF inflows hit $1.83 billion over just a 5-day period. That's roughly 10 times the amount that flowed into Bitcoin funds in that same time frame.
But wait, didn't yesterday's report also mention some positive Bitcoin ETF flows finally, kind of pushing back against that ETH dominance? How do we make sense of that tug of war?
You're right to point that out. It's complex. After that 6-day streak of net outflows, spot Bitcoin ETFs did record inflows. Over $250 million combined on August 25th and 26th.
Okay.
And another $179 million reported yesterday for Thursday's flows. So that was 4 straight days of positive flows, totaling $571 million.
A bit of a fight back then.
A bit. But today's report, covering Friday, showed that streak was broken. $126.7 million net outflow yesterday. Though, interestingly, BlackRock's IBIT was an exception. It still had inflows.
So the tug of war continues.
It really illustrates this complex reallocation happening with institutional capital. You could argue Bitcoin served as the Trojan horse, right? It paved the way for traditional finance to get comfortable with the digital assets.
Now they're diversifying.
Exactly. Now that capital is beginning to diversify into other established digital assets, and Ethereum, especially with its staking yield and regulatory clarity around stablecoins, is a prime candidate.
Okay, let's shift gears a bit. From that, let's call it fast money of tactical traders and ETF flows to maybe the slow money, corporate adoption. We saw quite a bit on that front this week.
We absolutely did. It's accelerating.
Monday's report mentioned Metaplanet buying another 103 Bitcoin, about $11.7 million worth, bringing their total stash to nearly 19,000 BTC, worth around $2.2 billion now.
Yep. And Strategy, formerly MicroStrategy, they also added 3,081 Bitcoin for about $356.9 million between August 18th and 24th.
These are not insignificant sums.
Not at all. And what's really striking is how they're often financing these buys, using things like stock acquisition rights. It shows this deep long-term conviction. They see market dips not as threats, but as prime accumulation opportunities.
Right. Buy the dip, but on a corporate scale.
Exactly. And think about Metaplanet getting included in the FTSE Japan index. That forces passive funds tracking the index to buy Metaplanet stock, which in turn creates this indirect demand for Bitcoin.
Clever. And were there others? Wednesday's report mentioned Kindly MD.
Yeah, Kindly MD, Inc., they're NASDAQ listed. They filed for a massive $5 billion equity offering specifically to build a substantial Bitcoin treasury.
$5 billion. Wow.
And Metaplanet itself announced plans to raise another $1.2 billion for more Bitcoin. This trend is clearly growing, and these players seem deeply committed.
And then yesterday's report, August 29th, introduced a new player, American Bitcoin, backed by Donald Trump's sons.
Yes, that's a Bitcoin mining and holding company. They're preparing to go public on NASDAQ, likely in early September via a merger.
Interesting timing.
It creates this sort of pure play, politically connected public company that's focused purely on accumulating a strategic Bitcoin reserve.
And speaking of accumulation, today's report had an update on Strategy, MicroStrategy's holdings.
An astonishing update. They now hold 629,376 Bitcoin, valued at over $73 billion at recent prices.
That's just a huge amount of supply effectively taken off the active trading market.
Enormous. And consider this. Corporate Bitcoin purchases actually increased by 35% quarter over quarter in Q2 2025. And overall institutional demand is running at around 1,250 Bitcoin per day, while miners only produce about 450 BTC daily.
So demand is vastly outpacing new supply.
By almost 3 to 1. It makes a supply squeeze feel like, well, almost a mathematical inevitability down the road.
And we even saw sovereign development mentioned in Tuesday's report, didn't we?
We did, and it's potentially groundbreaking. A legislative proposal in the Philippines to create a national strategic Bitcoin reserve.
A national reserve.
Mandating their central bank acquire 10,000 Bitcoin over 5 years specifically to help pay down national debt. And apparently, this proposal got positive commentary from Japan's finance minister.
Fascinating. So corporates and now potentially sovereigns getting involved.
It really highlights this clear split, doesn't it? This two-speed market between the tactical ETF investors reacting to short-term signals and these long-term sovereign and corporate entities playing a completely different strategic game.
Okay, let's zoom out a bit to the broader economic picture. Tuesday's report touched on Federal Reserve uncertainty. What was going on there?
Well, there was some initial optimism for a September interest rate cut after Fed Chair Powell's remarks at Jackson Hole.
Right.
But that got tempered pretty quickly by more hawkish statements from other Fed officials. And then things got even more complicated.
How so?
President Trump's unprecedented move to fire Federal Reserve Governor Lisa Cook. That raised pretty significant concerns about the central bank's independence, all adding to a very uncertain macro backdrop.
Any other global factors hitting the market this week?
Yeah, the proposed 50% additional U.S. tariffs on aluminum and steel also reported Tuesday. That sparked worries about economic contraction, which tends to foster a broader risk-off environment. Investors get nervous and reduce exposure to things they see as higher-risk assets, like Bitcoin, often.
But what about inflation itself? Yesterday's report, August 29th, had the latest PCE data.
That's right. The U.S. PCE inflation data, that's the Fed's preferred measure, came in pretty much as expected for July. Core PCE at 2.9% year over year, headline PCE at 2.6%.
So no big surprises there.
No major surprises. And this is significant because it means it's unlikely to change the market's expectation for a rate cut in September. The odds are still over 85% for a 25 basis point cut.
Which should normally be good for Bitcoin, right? Lower rates?
Generally, yes. It's usually seen as a supportive tailwind, however. Today's report highlighted a really interesting divergence this month. Gold rallied 4% in August, hitting record highs. Bitcoin, over the same period, actually depreciated about 5%.
So they're not moving together right now.
Not at all. It suggests Bitcoin's price currently is maybe more sensitive to stock market risk-off sentiment and its own internal market structure, like those leverage flush-outs we talked about, than it is to those broader economic trends like inflation or rate expectations.
Very interesting. Okay, let's shift to the regulatory landscape. It feels like things are moving really fast globally there. Tuesday's report mentioned India reconsidering its policy.
Yes, and that could be huge. India's current, very punitive tax regime basically crippled its legitimate spot market, pushing a lot of activity into this less transparent shadow market.
Not ideal.
Not ideal at all. But the good news is their Central Board of Direct Taxes is now actually consulting with industry stakeholders. If they shift to a more structured, reasonable approach, that could be a monumental long-term catalyst for the region.
And what about the U.S.? We kept hearing about Senator Loomis and this Genius Act in reports from Tuesday, Wednesday, and Thursday.
Right. Senator Loomis is pushing hard to get a comprehensive market structure bill passed by the end of this year, though implementation would likely be 2026. That would bring much-needed clarity across the board.
And the Genius Act.
That's the Guiding and Establishing National Innovation for U.S. Stablecoins Act. It was actually signed into law back in July. It provides clear regulatory rules for stablecoins.
Which is important because
It effectively de-risks a really core part of the crypto ecosystem, especially for Ethereum, right? Clear rules for stablecoins make institutions much more comfortable, and that's definitely helping drive some of that capital rotation towards ETH we discussed.
got it. And didn't the Commerce Department make some kind of blockchain announcement too, mentioned yesterday?
Yes, quite a profound endorsement, actually. The U.S. Commerce Department announced it will start publishing official economic data, including things like GDP, directly onto a blockchain.
Wow, using blockchain for official government data.
It's a foundational step. Integrating the tech into core government functions like that is huge for mainstream adoption and legitimization.
So looking ahead in the U.S., are more ETF approvals likely? Yeah, what's this debate I read about on Capitol Hill?
Okay, two things there. First, the SEC is expected to decide, maybe as soon as late September, on new generic listing standards for commodity and crypto-based ETFs.
Generic standards.
Meaning standards not tied to just Bitcoin or Ethereum futures. If approved, this could genuinely open the floodgates for all sorts of crypto assets, Solana, XRP, maybe even Dogecoin, to be packaged into regulated ETFs or ETPs.
So potentially many more crypto investment options coming.
Potentially. Yesterday's report noted there are already 92 crypto-related ETPs in the pipeline waiting for regulatory nods.
And the Capitol Hill debate.
That's a crucial one. A coalition of over 100 crypto companies is pushing hard for explicit federal protections for non-custodial software developers. They're arguing these devs shouldn't be classified as money-transmitting businesses just for writing code.
Why is that so important?
It's fundamental for permissionless innovation. If writing open-source financial software makes you a regulated money transmitter, it could stifle development in the U.S., so a really key battle to watch.
Are other parts of the world keeping up with all this?
Oh, absolutely. Thursday's report highlighted Europe is now implementing its comprehensive MiCA regulation, that's the Markets in Crypto Assets framework. It's creating a unified rulebook across the EU.
How's that playing out?
Well, you see variations. Greece, for example, introduced tougher licensing and capital gains taxes. But they're also fostering innovation, like Young Platform launching Europe's first MiCA-compliant neobank.
And the UK.
The UK is charting its own path. They're implementing the OECD's Crypto Asset Reporting Framework, CARF, from January 2026. That means detailed transaction reporting. But they're also diverging a bit from MiCA, trying to attract international stablecoin business specifically.
Trying to carve out a niche.
Exactly. Though the FCA, their regulator, is still very active in warning about scams they flagged over 4,400 reports just in the first half of this year.
Okay, so a complex global picture. Let's move away from the market noise and regulation, back to the core, the Bitcoin network itself. Tuesday's report mentioned aggressive miner expansion.
Yeah, the network fundamentals look incredibly strong. Miners are investing heavily. HIVE Digital, for instance, blew past 16 exahash per second. That's EHS, a measure of computing power securing the network.
Right.
And they're targeting 25 EHs by Thanksgiving. They've basically doubled their daily Bitcoin production since May, thanks to efficient new miners like the Bitmain S21 plus Hydro.
And wasn't there news about Google's parent company, Alphabet?
Yes, this was significant. Alphabet acquired stock warrants in TeraWulf, a Bitcoin miner.
Google investing in a Bitcoin miner.
Warrants, but yes. It signals the strategic acknowledgement from a tech giant of the industry's growing importance, especially as a major consumer of energy and data center infrastructure. It feels like a critical phase of industrialization for mining.
And overall network security.
Stronger than ever. Global hash rate and network difficulty are both at new all-time highs. Makes the network incredibly secure.
What about innovation, actually, on the Bitcoin blockchain? I recall Monday's report mentioning Layer 2 solutions really taking off.
Oh, it's been an absolute explosion in Layer 2 development. The total value locked, or TVL, on Bitcoin Layer 2s, it soared 105% in just the past 30 days.
105%.
Yep, exceeding $2 billion now. Networks like Merlin Chain, BitLayer, they're leading the charge. And the broader BTC high sector that's DeFi on Bitcoin, its TVL, jumped an incredible 22 times in 2024 alone, hitting over $7 billion.
So massive demand to actually use Bitcoin within DeFi now?
Huge demand to make Bitcoin a productive asset, not just something you hold. We also saw Bitcoin Hyper, HYP Air, raise nearly $12 million in its pre-sale. Their plan. to integrate the Solana virtual machine, the SVM.
For faster smart contracts on Bitcoin.
Exactly, for high-throughput smart contract capabilities, aiming to massively expand Bitcoin's utility beyond just payments and store value.
With all this change, institutional money, layer twos, corporate buying are their attentions. Any challenges or internal debates within the Bitcoin community itself?
Oh, for sure. Monday's report touched on this sort of cultural divide that's becoming more apparent.
Between who?
Between, let's say, the early adopters and maximalists, the not your keys, not your coins crowd, who are often skeptical of institutional products like ETFs,
Right.
and this accelerating wave of institutional adoption and technological change, like layer twos, there's definitely some friction there.
But the core protocol itself is stable.
Absolutely. Thursday's report confirmed the Bitcoin Core Protocol remains a bastion of stability. No ongoing network issues, no critical security advisories. Developers are very focused on future-proofing it.
How are they doing that?
Through things like BIPs, Bitcoin improvement proposals, they're working on stuff like post-quantum cryptographic standards to make sure Bitcoin is secure against future quantum computers.
Planning way ahead.
Way ahead. And also crucial upgrades like OPSAT and OPCTV. These are code changes that would enable more complex smart contract-like conditions on Bitcoin's base layer, which would significantly boost the power and potential of Layer 2 solutions. And of course, the Lightning Network remains central to scaling payments.
Okay. So let's try and bring all this together. We've covered price swings, whale moves, institutional flows, corporate buying, regulation, network health. What does this complex picture mean for you, our listener, trying to make sense of it all?
I think what we're really witnessing, as today's report summarized it, is this profound decoupling between short-term speculative price action and long-term fundamental value accrual.
Decoupling. Explain that.
It means that while the internal market mechanics, leverage, liquidations, short-term ETF flows are creating all this noise and volatility day to day, the underlying trend of structural adoption by serious long-term players like institutions and corporations is powerful, and it's actually accelerating.
So ignore the noise, watch the fundamentals.
To a large extent, yes. Because that immense and growing supply-demand imbalance we talked about, driven by this relentless institutional and corporate accumulation and now being reinforced by growing regulatory clarity, it just makes a significant upward repricing of Bitcoin seem like, well, more a matter of when, not if.
And didn't Bitwise put out a pretty bold projection mentioned midweek?
They did. Their comprehensive report mentioned Wednesday projects Bitcoin's price could potentially reach $1.3 million per coin by 2035, driven precisely by this institutional demand running up against Bitcoin's inherently inelastic supply.
$1.3 million.
Wow.
Okay, so looking forward then, what should listeners be watching closely in coming days and weeks?
Well, in the immediate short term, definitely keep an eye on those technical price levels we discussed, that $109,000 support and the $113,300 resistance. And the daily ETF flow data still gives good clues about short-term sentiment shifts.
Okay.
Medium term, two big things. That SEC decision on generic ETF listing standards, potentially late September, that could be huge. And the NASDAQ debut of American Bitcoin, probably also in September. That'll be interesting to watch.
And longer term?
Long term, it's about tracking the continuation of these bigger themes. Ongoing institutionalization, the expansion of corporate treasuries holding Bitcoin, and just Bitcoin's broader acceptance as a legitimate macro asset. These are the trends that will likely reduce volatility over time and really solidify its role in the global financial system.
It really has been a fascinating journey through just 1 week's events. Highlights just how much is churning beneath the surface in this rapidly evolving market.
It absolutely does. And it leads to maybe a final provocative thought for you, our listener. Given this environment, we've described the sort of tactical caution in the short term, but clear strategic optimism long term.
Yeah.
Is this current period of volatility and, frankly, short-term price weakness, is it actually presenting the most attractive entry point we've seen in a while for truly long-term strategic buyers? Something to definitely consider as you continue your own deep dive into this space.